the S&P 500 chart. We had this big uptrend, and then in 2001, 9/11, it broke down. And it broke down, we had over a 45% correction. And now from 2009 to 2000 now to 2016, we've had another rise up this peak. And if it rolls over, we're going to see a big breakout. Just like when we had the big crash, 2007-8, you had the breakout in gold that went up from 1,300 to 1,900. So we could have the same type of breakout in gold if we have this rolling over.
In the 1990s, he created a billion-dollar copper producer. In the 2000s, he launched what would become one of the world's top primary silver producers. And in 2015, he started what he believes will be his third billion-dollar company. This is the one gold stock to research right now. Visit crushthestreet.com/investright.
Hello everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I'm joined today with a first-time guest. His name is Don Durrett, author of How to Invest in Gold and Silver, and it's a complete guide with a focus on mining stocks. And I do have a copy of this book, and I'm going to have a great time reading it when I do read it, and we'll for sure do a follow-up interview with Don again afterwards, but I believe we're going to get a sneak peek of some of the content today through our discussion. His site is goldsilverdata.com. Don, thanks so much for joining me today.
Ken, thanks for having me on.
Don, we've seen a gold break through 52-week highs here in 2016. However, last week, gold is down roughly 40, 50 bucks. From it being pretty close to 1280, and now we're sitting at 1230. Do you have any reservations about labeling what we've seen here in 2016 a bull market?
Yes. I don't think we have a bull market yet in gold. I think that we need to break out to 1310 before I think the go sign, we see the green light. Yeah, we've had basically a $200 breakout from the lows, which appears to be a bull market. It did cross over 20%, but it's pulled back, like you said, $50 in the last 2 days. So
what's significant about 1310?
Well, the last intermediate high, which is, I kind of follow these technical charts, and the last high was 1308. So it needs to close above that high, otherwise it could break down. Mm-hmm. So the technical charts, and a lot of the traders use them. And I followed them over the last 10 plus years. And if you don't cross these technical barriers, these markets tend to break down. So when they talk about a bull market, that means we've had a breakout. But I don't think we've quite had one yet. Because gold and silver mining stocks is very risky, they're very, very volatile. For instance, I think yesterday my top 25 was down 6% one day. So you can have these very volatile markets. So when you call something a bull market, it shouldn't be going down 5% in one day. So it doesn't have that kind of support yet. And so once you get into them, if you put a stop loss in at 5%, for instance, or even 10%, you get stopped out very quickly. So you want to make sure that you are in a bull market before you start loading up on some stocks.
So Don, you've talked about the price points as far as 1310 and the technicals, the significance of those numbers. But if we don't cross that, how low do you see gold actually going?
Well, because the economy is fairly weak right now, I think that the previous low of 1045 will hold. I don't think we're going to go back and threaten 1045 or 1000 as long as the economy stays weak, because I think that this year you're seeing a lot of people that are talking gold, that are saying gold's a good place to be. And the reason why is because the risk level is increased. So I think that since the risk level is increased for a recession, I don't think we're going to go back there and retest 1045. The only way that's really going to happen is if we get some weakening in the economy. Strengthening in the economy. And so if we see some strengthening, if we see, for instance, if we see a 3% growth rate in Q2, we're not going to see it in Q1, of course, but Q2 or Q3, we see a 3% growth rate, or maybe even Q4. If it comes back, if the growth rate comes back, let's say the stock market stays high this year, stays like, maybe we get a new high at 18,000 this year. If that happens, Gold could go back there and threaten 1,000. So it's all about economics and strength of the economy. Gold is the hedge. That is what people are using as their fear trade. That's what they're using for insurance.
Yeah.
So that's the key. So if the economy stays where it's at right now, which is fairly weak, you can look for gold to, I would say, stay above 1150.
There's a significant amount of safety there, because I think most of us agree that the economy is weak and is going to continue to be weak here in 2016.
Yeah, right now it's the black swan that the gold and silver investors are waiting for. We're waiting for something to break down somewhere. We have global economies that are weak all over. China just said that they were going to lay off millions of people in their government, in both coal and iron, and so they're laying people off. And so we know how weak Japan is. Europe just went into a QE, so they're weak. The U.S. is growing at 1%. So the global economy is very weak. We've all heard about Brazil. Brazil is basically in a severe recession. So right now, gold's looking like, as far as looking at how low it can go, we don't know. At this point, it looks like, like I said, I think 1150 looks pretty solid. But if things strengthen in second, third, fourth quarter, then it's a whole new ballgame. That's the whole risk of investing in gold and silver.
So Don, what are we seeing here with precious metals? Again, this is the first time we're getting the chance to get to know you. What are your thoughts on why precious metals are going up here in 2016, and why you believe in precious metals?
Well, we've had basically a 5-year downtrend in gold. So and I think it's a secular bull market. A secular bear market on a long-term bull market. So I think that this 5-year downtrend is not a bear market. It's more it's a secular. We will reverse and we will head higher. So why do I believe in 2016? I don't necessarily believe in it, although there's a lot of factors and a lot of data points that are pointing to a potential reversal in gold. And the beginning of this year is a good example of that. So the big key for me is the S&P 500 chart. If you look at it from 1995 to 2001, we had this big uptrend, and then in 2001, 9/11, it broke down. And it broke down, we had over a 45% correction. And then from 2002 to 2008, we had another big rise, and then it fell over, and we had the crash in 2008, 9, 2007, 8. And it went down again more than 45%. And now from 2009 to 2016, we've had another rise up this peak. And if it rolls over, we're going to see a big breakout. Just like when we had the big crash, 2007-8, you had the breakout in gold that went up from 1,300 to 1,900. So we could have the same type of breakout in gold if we have this rolling over. So gold is basically a hedge against uncertainty. I call it the fear trade. People buy gold mainly out of fear. It's basically insurance. So the only way I think that we're going to get a big breakout in 2016 is if we get a recession. Now,
so is that completely, the thesis for gold at this point here? I mean, the stock market has actually been going up somewhat over the last few weeks or a couple weeks or so. And we're only a point or two down from year to date, where the S&P was, January 1st. So we're kind of seeing a different environment here. So if, let's say, the stock market starts getting stronger here in 2016, do you think that's going to be bad news for gold going forward?
It definitely will be. It'll create a lot of headwinds for gold mining and for gold prices if the stock market does remain strong. Now, if you look at the S&P chart, it hasn't come back to its high. It still has about 200 points to go, 150 points to go to get to 2,200. So it needs to break through that 2,200 to get going, to really prevent a recession, if you will. So right now, I'm ambivalent. Are we going to avoid a recession this year? I think the only way that the miners do extremely well this year, and the only way we get a gold breakout, is if we do get a recession. Or if we don't get a recession, we definitely get a breakdown in the stock market. So now I'm not sure which way it's going to go. Right now I'm kind of ambivalent, but the data points are pointing to the stock market possibly having a lot of headwinds this year. We can talk about some of those data points.
Yeah. Well, let's talk about those data points. I was going to talk about, ask you about manipulation, but, let's talk about those data points and just give us some idea of your research on that.
Well, since I'm a gold investor and because gold is so volatile and such a risky environment, I have to basically be a macroeconomic analyst. So I have to know exactly what's going on. Otherwise, I have to lower my risk, if you will. So I'm constantly checking all the data points. So in 2014 and in 2015, the global economy, the U.S. economy, especially the U.S. economy, was fairly strong, stable, if you will, until we got to about the third quarter in 2015, and then everything started to weaken. And it weakened a little bit earlier than that, but it really started to show itself around August of last year. And so the U.S. economy right now is almost at stall speed. We're growing right around 1 to 2%, which is close to it. If you look at the PMI numbers for both manufacturing and services are right around 50. Well, those are recession numbers. And we haven't had a recession since June of 2009 we started growing. And so we're getting close to that. So if you look at how long recessions last, or in between recessions, we're getting really long in the tooth in this current recovery. Yeah. So this recession, we're getting closer and closer, and the PMI numbers are starting to show that. The other thing that's really starting to show that is the export numbers out of Asia. So you have China, Japan, and South Korea right now all have double-digit year-over-year export declines. So they're having a hard time selling goods to the U.S. consumer.
Last week, we had the 7th year anniversary of the stock market, the U.S. stock market, bull market. And, it's been definitely due for a pullback, a major pullback. And we've somewhat seen that. I mean, with, like you said, from the high, we're still down a couple hundred points for the S&P 500. But, as far as the last few weeks go, the stock market has appeared a little stronger, and the Fed has a rate decision this week, actually. And I wanted to get your thoughts. I mean, are they likely to raise rates here in 2016 with the current, short-term environment that is, the stock markets have at the moment?
I don't think... it's really hard to predict that. I think it could go either way. But I think ultimately raising rates is probably going to be a mistake heading into a recession. I think that, one of the things about the central banks, and this is the reason why I'm very bullish on gold, if you look at it at a risk-reward standpoint, is the central banks kind of started taking over in the 80s and the 90s and this century, where the central banks have this huge impact on all of our monetary policy. And if you look at the way that they're printing money, I think one of the reasons why the stock market is doing well right now is because the ECB said that they're going to, last week, that they were going to do another quantitative easing.
Right.
And so this easing, everybody thinks, well, the central banks can control the economies and they can maintain, if anything, they can maintain stability. Maybe not, significant growth, but at least they can prevent them from crashing. Well, I'm not so sure. Can the U.S. economy grow, at a 3% rate and maintain this? If you look at the headwinds, it's going to be very, very difficult. Especially, if you look at globalism in the U.S., it keeps steadily. It keeps making the middle class keeps shrinking. Yeah. So the middle class, their spending, their incomes have been shrinking, and their ability to spend as consumers. Right now, we're having a downturn, for instance, in freight traffic, which just shows you the reason why you have lower freight is because you have less people spending money, less goods being moved. And then inventory to sales. The inventories are the highest they are right now in the U.S. since 2009, which is another recession number. So are things going to turn around in 2016? It doesn't look like it right now. But for me, so I don't know for sure if this thing is going to roll over, we are going to see the stock market drop 300, 400, 500 points and gold's going to take off. But I think what I like to talk about now, because so those are the kind of the underlying fundamentals that we have an eye on to see if this U.S. economy is going to slow. But gold and silver prices have the potential to really break out big if that does happen. So we should talk about that.
So, Don, in that same vein, I wanted to ask you about, the central banks controlling things and just the powers that be that don't want precious metals to move, and your thoughts on whether or not precious metals will be able to move in this type of environment. And even last week, on Thursday, when gold did hit its most recent high, the next day when the Asian markets opened, gold was down 10 points or $10. And then, it continued to get chopped down on London and then the Globex. And, open interest on Friday, was continuing to rise, but the price was continuing to fall down. And, in my opinion, there's some evidence of precious metals manipulation. And just get your thoughts on this, and if you think precious metals will ultimately overwhelm the manipulation over time.
Manipulation is something you need to be cognizant of or aware of if you're a gold and silver investor. Now, I don't know if the manipulation is outright, obvious for everyone to see, and a lot of people make arguments that it is happening. But the one thing that we do know is that we get these beatdowns, right out after trading closes in these very thinly traded markets. We see these beatdowns of $10, $20, $30 very quickly, in minutes and seconds. So you have to be aware of that. But the other side of that coin, so and in the open interest you talked about, which is short trading. So we have people that are basically shorting the market in paper with these huge contracts. Right now in silver and gold, it's unbelievable how much paper is being shorted. So you have to be aware of that. But simultaneously, you have to start looking at if the change in the psychology around gold and silver happens or occurs, you will see these breakouts. So what I do is I look at the technical side of it and we'll look for the breakouts, because if you get the breakouts, they won't be able to beat it down anymore. It'll be kind of out of their control. That's the way we had the breakout all the way to $1,900 gold, because we got the breakout.
So the big money is flooding in at that moment. So you're saying 1308 is a technical point that's going to trigger money to flow into precious metals?
Yeah, absolutely. I definitely believe that. And so right now, and that's why I've been nervous, that's why I haven't called the gold bull market, because until you get through these technical barriers, you get these beatdowns, and they basically can control the price within a range. But once it gets out of their hands, then they can't anymore. And that's one of the reasons why you see these big beatdowns. They don't want to get it. They know the technicals are there. So you have to pay attention to where the next the technical points are that we're trying to break through. And then once we break through, that's when if you're a trader especially, that's when you want to buy some of these shares, because then you can get a really solid bull market. And who knows what the upside is? It could be absolutely huge. But the technicals right now you want to look at is 1280 in gold and 1310. Those are the two we want to break through. We want to close above 1310. And ultimately, for me, the all clear is 1450. If we close above 1450, I think it's all clear from there all the way to a new high. So basically, it's going to go from 1450 to 2000, and that move from 1450 to 2000 is probably going to be one of the best opportunities for making money in miners that we're going to have since 2009.
Wow! So the big bull market move you're saying will be from 1450 to 2000. I'm going to write that down because that's an insightful analysis. Don, switching over to the miners, we've seen oil collapse over the last year or so, year and a half. And with that, the costs for these miners have come down too. Would you say that the bull market for these miners was triggered by collapsing oil prices?
No, not in the slightest degree, because, for instance, the silver miners are still having trouble at $15 silver. I mean, the low oil prices still haven't made them profitable. Probably now the majors, they've definitely become more profitable, and you could say the HUI, it's broken out from 99 all the way today to 170, which is a 70% move. But I don't think that has to do with energy prices. Energy, yeah, I mean, it helps them a little bit, but the big one is the risk. We were down at $1,100 gold, and the risk was just really, really high, and so these miners got sold off. The HUI got sold off 80%. It went from 610 all the way to 99. Huge sell-off. So we were down there at the bottom, and then gold prices started going up, so your risk went down. It was the one thing about investing in these miners is risk offset is just huge. For instance, once you build a mine, once you get into production, once you show a profit, you de-risk that profit, you de-risk the investment, so the price of the stock starts going up. So when you lower the risk on these miners, that's when they start really taking off. So it really wasn't the energy prices as much as it was the higher gold prices and the trend of gold prices higher.
The continuing trend and the belief that it is going higher. And
Yes.
like you're saying, the technical triggers that will cause more and more big money to move into the sector. So as far as on a fundamental perspective, what are some of the key figures for gold that will cause their profitability to substantially become comfortable?
Well, the key, of course, is your cash flow. So we need to get gold prices higher, so where these companies are much more profitable and they have cash flow, and then they'll be able to get loans because of better balance sheets. The investment banks will come in and start pouring money into the sector. Now, what is that comfort level? I personally think we really don't get comfortable until about $1,400 gold, because the cost on these projects have really went up. The break-even points have really went up. Like I said, the silver miners right now at $15 silver, half of them are still losing money. So we need to get silver to $18 before, even at 18, we're not really comfortable.
Yeah, a lot of the companies weren't breaking even at $20, $25 silver.
Absolutely.
But that was at a much higher oil price as well.
Yeah. So if you look at this, so we need to have higher gold and silver prices for these miners to basically be profitable and, growing again and solid and lower risk. So we're going to get these higher prices. It's going to happen. We are in a low price environment right now. And the only reason we're in the low price environment is because people think that that gold's going to go to zero, if you will, but it's not. It's going to go higher. And so once that psychology shifts and people recognize we're going to get higher prices, we will get higher prices.
Don, with silver being much more volatile than gold, do we need it to move significantly higher as far as percentage-wise to confirm a bull market trend, considering it's, now, I mean, it needs to more than triple to get to its high, and gold did not even get cut in half from its high in 2011. So do we need to see silver go up by, 50%, 100% for you to feel comfortable that silver's in a bull market?
I think that silver follows gold. So for me, the key thing to keep my eye on is gold. And so, again, once we get to 1310, we start trending higher. Silver will start outperforming gold as it catches up. So we have right now a gold to silver ratio that's, gosh, I think I got all the way to 80. I'm not sure what it is today. It's above 75 though, which historically is extremely high and extremely out of balance. We're going to see that ratio drop below 40 for sure when we get a breakout here. So we're looking right now, silver's probably 50% undervalued, 100% undervalued. It probably should be at $30 right now when you look at the gold silver ratio. Yes, but I'm not concerned about it happening. I think it will happen automatically.
Right.
And it just follows gold. So just keep your eye on gold. As gold goes up, then silver will.
Is it fair to say that silver has a lot of the industrial collapse demand priced into it already? And, what's going to send it higher, even in a collapsing global environment, is the fear trade that you were talking about?
Yes, the fear trade is crucial for these prices. For instance, I'm expecting $100 silver. You're not going to get to $100 silver if you don't have a really high fear trade where people are buying silver and gold. Well, they're buying silver because they can't really afford gold. Because gold's, if you buy 1 ounce coin, it's going to be too expensive. So they're going to go to silver instead. As a matter of fact, I think you actually had more silver sales than you had gold sales last year, as far as the number of the silver eagles versus the gold. It's actually more people were buying silver instead.
Don, I heard that before, but what does that tell you about gold if people aren't going to buy it because it's too expensive at $1,200 an ounce? Well, yeah. People are going to buy it on the upper end. I mean, the people that have the money to, but the most of your investors are buying a $100, $300, $500 at a time, and so they don't want to pay the high premiums on these coins. They can't afford a full coin. If you can't afford a full coin, you have to pay higher premiums. So your premiums are going to be a lot less if you're buying silver. So it makes sense. So also, silver's actually a smarter investment. I look at gold as an asset. I don't look at gold as an investment. I look at that as an asset, whereas silver is an investment because silver has the potential to go to at least 100, but possibly $200 or $300 an ounce. So the returns on silver could be phenomenal. Yeah, no, I totally agree.
I don't see that in gold.
Right. Gold is more of your hedge, and even with what we've seen, it's moved a lot less volatilely than silver has. So, Don, closing thoughts here. What are you here in 2016? What is the most important advice you are giving people here in 2016 regarding their investments?
Well, the big thing for me for 2016, and it's not just 2016, it's the reversal of this gold trend, this downtrend. So you have to, for instance, I really think, your website's Crush the Street. We actually have the opportunity here to completely crush the street if gold breaks out. Like I mentioned, that 1450 to 2000, that might not even be the upper ceiling of this. We could be going up to $2,500 gold or even $3,000 gold. So the upside potential in the miners is spectacular. So we just have to keep an eye on this market and look for when it's going to break out. And look for the opportunities that are going to arise. Look at, what are some of the best miners? What are the best, risk reward stocks out there? Put your eye on some of these stocks, because we're going into this period here. It might not happen in 2016. I think it possibly could, but it might happen in 2017. But if we do get this breakout, if we get a new high, for instance, the old high was 1935 gold. We get a new high, which I think we're going to see. The opportunities are pretty spectacular for the miners, and so that's what I've been doing with my website, is helping people to kind of get ready for this.
You're absolutely right, and we've seen that with the small moves that we've seen in gold, the small moves that we've seen in silver. We've seen these mining companies move by 50%, 100%, and you know what? And that's really just the beginning. So, Don Durrett, everyone, thanks so much for taking the time to come on the show with me today, Don. If people want to learn more about what you do, get your book, or follow your work, where would they go and what would they find?
Well, go to my website, goldsilverdata.com. So the website, I actually have 550 gold and silver miners. So all of the significant mining stocks that trade in North America, London, or Australia, they're all on my website. And so you can search the database. It's very flexible. You can search it by all the various parameters. And I've categorized each of the different companies. You can search by category, you can search by risk, location, market cap, even the cash and their debt. So you can find the stocks. It's probably the only site where you can actually find all the miners. You can get look around and search for what you're looking for what your risk area is. Anywhere from the majors to the small juniors. So that's what I've done. I'm helping people to identify these opportunities.
Well, Don, that's an amazing resource. And again, I thank you so much for coming on the show with me today and sharing your knowledge and your years of knowledge that you've come up with and that you've been able to put together and share with our audience today. So thanks so much. And let's do this again in the near future here.
Yeah. After you read my book, which is basically a textbook, so it's the only book that teaches you how to invest in junior miners. So after you read the book, we can go over the book. So that'd be great.
Sounds good, Don. Take care, sir.
Thanks, Ken.